I'm happy you guys are here today. This is a Multifamily Investor Nation Monday Meetup. I'm your host for today. My name is Carlos Di Reinoso, and I'm feeling a little nude here because I'm usually in a suit, and today I'm casual, bearing the weather and everything else. But I'm very grateful for you guys for showing up today. So thank you for that. And if you would, while we get started here, if you guys would, just kind of go around the room, introduce yourself. If you're in multifamily, let us know what you're currently up to. And if you have another profession or you're just getting started, please let us know that as well. Who would like to go first? All right, don't all jump at once, guys.
Karen Ergen.
Okay, go ahead, please.
Karen Ergen. I am just beginning in multifamily. It interests me. I haven't done anything yet, so this is like my first foray into it. But I'm used to doing due diligence reports, so nice. Maybe I can put them together, you know.
Yeah, and who are you doing the due diligence report for?
I work for a large corporation.
Got it. Okay, cool. Yeah, so your capacity, are you a realtor, a broker, a lender?
Right now, right, I'm a private money broker.
Awesome. Appreciate that, Karen.
Just getting started. So I hope to make connections and meet people and, you know, just starting out.
So. Sounds great. You're definitely in the right place. This is a great platform to get started with. We definitely have some investors with experience here. We also have some people that are in the same boat, just trying to, you know, get to know the industry a little bit better. So thank you for joining us and thank you for sharing that. I appreciate that.
Thank you for having me.
Oh, it's a pleasure. Anyone else would like to go next, please?
Oh, can you hear me?
Trey, go ahead. Yes, sir. Loud and clear.
Yeah. Yes, sir. My name is Ray Milton. Well, Tyree, you can call me Ray. I retired from the military. I'm currently a claims adjuster right now. I have always been wanting to get into real estate. I have not had the opportunity to get a multifamily home. I have my own home that I rented out for a while, and I just recently moved back in, just a single family. So now I'm just trying to get out there and do it the right way.
That's awesome. Thank you for that. And so you're looking to invest in single family, multifamily, or kind of just weighing out your options right now?
Well, I always wanted to do multifamily. Well, that was after I, bought this home. I wasn't in the mindset of investing until I got this home. And after 2008, found out I wasn't able to sell this home at all. And I figured, I just have to rent it out. And then once I rented it out, I seen the potential for income. And then I started doing more research after that and started gaining knowledge on, the best, I guess the best route to take was to do multifamily homes to get like better bang for your buck. So I always been wanting to do it. I just, situations, especially, I guess I was more serious around right before 2020 happened. And after that happened, it became a little more difficult because I was still serving in the military and we was banned for traveling for a while. And I just didn't feel comfortable doing any long distance buys.
Long-term deals. I get that. Yeah. And it's so great. First and foremost, thank you for your service because I really appreciate that. Yes, sir. Thank you for that. Secondly, thank you for bringing up the crash of 2008 because you brought up a good point and we're kind of in a similar market right now. And so I'd like to just briefly touch up on that. Thanks for sharing your story, by the way. And that's that, we're kind of in a similar market now where we're, like right before the crash, if you guys remember 2006 or so, property values were through the roof. There were multiple offers on every home, and I think that might be what happened in your case, that you actually ended up paying more for the house than what it was worth. And then at the time of the crash, you try to go ahead and sell the property. And then you realize, wow, I'm not getting as much for the home as I originally purchased it for. So now I have to end up putting it back on the market. Is that a fair assumption?
Yes, sir, it is. It was
Cool.
I think a 30,000, I guess, difference.
Wow. So by now, Tyree, by now it's come up though, right?
Oh yeah, I'm up probably like 20,000 at this point.
I figured as much. Yeah. I was just talking with James, a buddy. He was here at last meetup too. And we were on that topic of conversation with my broker and how they, we're seeing deals, multiple offers, and we're seeing some come in 20, even $40,000 above asking. So that's the market we're in. In case you guys don't know, we are definitely in a seller's market. Prices are high, but the demand is still there. So as long as we're seeing the demand, you're going to continue to see prices go up. And obviously interest rates are also increasing. So be on the lookout for that. While I still have you, can you tell me if you see my performing due diligence on multifamily screen?
Yes.
Thank you so much for that. I really appreciate it. JJ, would you like to go next? I always like when you do your introduction as well.
Yeah, no worries. Yeah. Johnson Jimison, better known as JJ. I'm here in the Atlanta market. My primary focus is looking for off-market deals anywhere from 5 to 75 units in the, not necessarily the metro primary market, but secondary, tertiary markets here in Georgia, surrounding Atlanta areas. I'm with a commercial firm. I am licensed, and I got licensed because I was doing this as a hobby. I want to become an investor, so I figured the best way to learn is to get licensed and roll up my sleeves and get dirty. So like I said, my primary focus is trying to find off-market deals. Once I do that, I plan to bring it. I got a group of investors and bring it to them and see if the underwriting meets their criteria. And if it does, go ahead and see if we can put together a syndication and move it.
That's awesome. Yeah, and so so you guys know, he mentioned the word syndication. So being that Karen and others might be newer, I just always like to clarify. So syndication is basically the pooling of monies to purchase something. So in the case of multifamily, you're pulling the funds together, the capital together to purchase multifamily, and multifamily is described as anything or properties that are 5 units and greater. If you have a 4-unit property, it is more than a duplex, but 4 units are not considered multifamily yet. So for multifamily, you're looking at anything from 5 units and above. So that's a great point. JJ, thank you for sharing that. And excuse me for a second, there's more people coming in. I'm going to make sure I let people in. And especially today, guys, I really want to thank everyone for bearing with me, for being so patient. We were having major technical difficulties. It's basically just me trying to get used to this computer and how it works. But I'm very grateful that you guys stuck around. I promise to bring you some very important information. Karen, go ahead. You had a question?
Yeah. JJ, what form of business would that be?
I'm sorry?
Well, if a group of you go together to purchase a property, what form of business?
More than likely, I'm thinking probably LLC. I mean, we get an attorney, real estate attorneys, syndicate, SEC attorney, and usually they put it together in an LLC.
LLC, okay.
Yeah, and you'll have a what they call a PPM, a private placement memorandum, and there is where you're going to see detailed on what the duties are for the general partners. You're also going to see what the investments are, what the returns are all about. It's usually about 90 pages and above. And again, that's a private placement memorandum. It goes into more details about the structure of the deal, if you will. I see another screen name here, AM. If you'd like to go ahead and introduce yourself, that would be great. You could go ahead and unmute yourself. Let us know what you're currently doing in the multifamily space. AM, are you there? All right. So we're just going to continue on. If later on AM, and I'm just using screen names here, guys. But if you'd like to introduce yourself, by all means, just let us know. And we could always come back to you later. Elaine, would you like to introduce yourself?
Sure.
So just let us know a little bit more about you, what you're currently doing in multifamily. And if you're not yet in multifamily, that's fine. No worries there. Just let us know what you're currently doing professionally.
So I'm actually an executive assistant. That's my W-2. And I work for a company that does analytics and underwriting on commercial real estate deals for other clients. So like Rainier, Collier, think multifamily. And I've actually been asked to start learning how to do these underwritings, but I'm at a complete loss. But I'm also looking to, at some point later on, invest in multifamilies. And I think that this is actually a really good opportunity for me to learn how to do that on both sides.
Definitely. And you're definitely in the right place, Elaine. And thank you so much for your introduction. Basically, and I'm going to go into further details, but we don't dive too deep into underwriting here, but I do have some very powerful resources that I could share with you guys that I think are going to be beneficial to you. And in reference to that, you know, there's a group that I'm a member of, and I highly recommend. And in just a second, we're going to go into more detail and I'll be able to tell you guys more. But thank you so much for that introduction. Yes, in this industry, even if you're not directly analyzing or underwriting the deals, you should always, my suggestion is always still know how to underwrite a deal. You could double check the numbers. You could double check your lenders analysis and other general partners and other investors who bring you deals. Excuse me for just a moment while I take a quick sip. Somebody asked me the other day, like, when you're in the meetups, what exactly is it that you're drinking? This one happens to be chai latte, latte. The other one I was drinking last month is actually this new thing called mud water. I'm not sure if you guys have heard of it, but mud water is basically like a softer coffee. It's made of mostly
Mushrooms?
exactly. It's made of mostly mushrooms and also some cocoa, some unsweetened chocolate, if you will, and some cinnamon. But it is so great because it doesn't make you as jittery as coffee, and at the same time, it has a lot of nutrition. So tea and mud water is what's in my blood. Thank you, guys. All right, so without further ado, let's get into the presentation. Today's presentation is going to be performing due diligence on your multifamily deals. And I'm your host for today. As you guys know, Carlos D. Reinoso. I'd like to stop for a second and just say thank you guys for joining us. Thank you for bearing with us today as we did have a little trouble getting started. But now that we are here, let's go ahead and move on to the next slide. So you guys are probably wondering, who is this gentleman and why is he here and why is he the authority on this information? That's a great question, and I do have a great answer for it as well. And basically, as you can see here is myself and Ash Patel. We were on the Joe Fairlish Best Ever, the Best Ever Real Estate Investing Podcast. I was interviewed by Ash Patel, which you see here on my left-hand side. And basically the topic was 5 tips to boost your online network and find investors with Carlos D. Reinoso, yours truly. And great podcast. It's, I believe, the longest lasting podcast ever. There's one daily. And they've been around, I think now over 4 years. So I highly recommend you guys listen to this. At the end of these podcasts, the host always says, where could someone find out more about you? And I'm going to give you guys a quick tip before we get any deeper into the content. And that's that what I would do is I would reach out to the investor directly right after the podcast and say either on through email or on LinkedIn, reach out to them and say, I just saw your interview at the Best Ever Real Estate Investing Podcast with Joe Fairless and Ash Patel. And I wanted to introduce myself and get to know you better. And what I found that does is it opens the conversation. But on top of that, we already know we have kind of like-minded ideas, right? We're both investors. We're both investing in multifamily. We have the same interest. And so we're synergized or aligned in our interests. So that's always been a good way to meet these investors. Plus, you'd be surprised just how willing they are to share this information with you guys and, answer any questions you might have, refer you to someone that they feel might be beneficial to you, and kind of help you grow your network. So I highly recommend that not only you watch the podcast, but also reach out to the investors at the end of the podcast as well. It's worked wonders for me. Okay, let's see. For some reason on this computer, it's slow to go to the next screen. Let's see what's going on here. Okay. Alrighty. I love the way things work very well until you're live, and then everything that could go wrong does. Bear with me. I'm trying to switch to the next screen here. There we go. So you guys know a little bit more about me. I am the co-organizer for this group. This group is Multifamily Investor Nation. If you guys have heard of MFIN, we do have meetups in person, and we have summits as well. Right now, we have a summit coming up in June. But before I tell you more about that, let me go into a little bit about myself. I'm a co-organizer for this group here in Atlanta. I'm the founder and CEO of Canis Major Investment Capital, which is our investment firm. I'm a managing partner. I'm also a general partner and capital raiser. We were currently raising, our last deal was a 240 unit 506B. That's a 506B as in Bravo offering in San Antonio, Texas. I'm also the author of the book, Selling Secrets You Can't Afford to Miss. It's a book basically I wrote to give back to the single family industry that has been so good to me over the years. And here you can see the photo of myself and Ash Patel. We're both bawling, laughing so hard throughout the interview. It was a lot of fun. I still remember it to this day. If you ever get an opportunity to be interviewed on this show, I highly recommend it. Give it a chance. Let's see if this works now. Okay, maybe spacing. Okay, what about? Okay, this is out. Okay, here you have, I was a moderator for this panel, if you will, which was raising capital and finding money for your real estate deals with yours truly. And basically this was part of the summit. I was the interviewer. We had people like Tim Lyons, Chris Larson, Whitney Sewell was there, and a lot of experienced investors. They always go to these summits. I highly recommend you go. There's always at least 300 to 500 investors, experienced investors, plus newbies alike. All righty, I went back too far. Let me see if I can go back one. Yeah, there we go. Okay. Quick announcements before we jump into the content. Please enter your name and email and contact information in the chat box below. Either myself or someone from MFIN will reach out to you. Again, it's in the chat box here below. Enter your name, email, and phone number, or any other contact information you might want to share, and someone will reach out to you. Everyone who gives us your email address will receive a copy of the free webinar video, How to Get Started in Multifamily Investing. That's free for everyone who puts their email address. So please go ahead, and not just for that purpose, but keep in mind, there's other investors on this call. It will be a great way for you guys to network with each other. Thank you guys for that. I have a YouTube channel. I hope you guys will check it out. Every month we post this meetups video in my channel over there. And also we have I think over 36 videos now. So a lot of great content. And it goes pretty much from soups to nuts, everything you need to know from getting started to investing in your first deal, and then after as well. I hope to meet up with you guys on LinkedIn, my Facebook, Instagram, Twitter, and now we're also on TikTok. Karen, if you wouldn't mind, if you could please mute while we're through this presentation, appreciate it. And if you guys would, I would really appreciate it if you could like, subscribe, and possibly leave me a nice comment in YouTube. It would help the algorithm. So thank you for that. And again, like I was saying previously, the meetup that's coming up, Multifamily Investor Nation Summit. You could go to mfinsummit.com and get more information. This one is going to be the first ever live event for MFIN. I believe it's going to be in Charlotte, South Carolina. I could get you guys more information, but actually to get more information, just go to mfinsummit.com, and you could enter my promo code CANIS, which you see here, CANIS, C-A-N-I-S, and that'll save you $100 off the price of admission. Okay, and no, I don't want this right now. Also, like I was mentioning right before, for everyone who wants like a deeper dive or let's say investment analysis or market analysis or how to underwrite deals, there's this great strategic partner membership, and the host is David Monroe. He's a CCIM instructor. And for those that don't know, CCIM is basically a real estate designation that one gets to show that one is experienced as a underwriter, a market analysis person, or a person that could analyze the market and also analyze deals. And so this instructor is also an instructor for that membership, that designation. And here, this link that you're seeing here on the screen is basically my affiliate link. So if you guys want to copy that, if you're thinking about joining, you could definitely copy the link, reach out to David, and he'll give you more information. So there's no obligation. You could just, inquire, and David will provide you more information around that. So I hope you guys will stick around toward the end, as we're going to have more networking opportunities, and we're almost done here. So bear with me, and we'll go ahead and jump into further into the content. Just a second here. Okay. And this was the topic of our last meetup. This was the one before last, raising capital for your multifamily deals. And here's the logo for strategic partnering with David Monroe. Let's see if it'll go to my next screen here. All righty. Sometimes it goes straight to the next one. Sometimes it gets stuck. All right. Here's so we're always trying to improve at Canis Major Investment Capital. So we have a new website. It's really cool. I mentioned it in our last meetup. It's actually Apartment Syndication Pro with Todd Heitner. You actually get the introductory price waived for this website to use Apartment Syndication Pro once you join strategic partnering with David Monroe. So just so you guys know, that's part of the bonuses that you get. If you join, you get your own website included. So this is one of the website examples that we have here. I'm thinking if I hit that enough, it'll go to the next screen. Let's see if it works. All righty. Let's see here. I'm not sure why. Like sometimes it does work, sometimes it does not. All right, let me see here. Maybe I could try this. And we're just getting to the content, so that I really want to get us there. Okay. There we are. One screen back. Where did it go? Resume share. Okay. All righty, here we are. Okay, so today's content, performing due diligence on a multifamily deal. All right, so when you're doing the due diligence on a property, this could be either multifamily or even single family. There's actually two main criteria to keep an eye out for: the physical due diligence and the financial due diligence. With the physical due diligence, you want to definitely drive the property. You want to not only drive around the property or drive to the property, but also drive the area. And you want to check what's around there. What kind of retail is around there? Are there multiple employers in the area? Are people moving into the area, or are they coming out of the area? And that's, very important to notate. You want to perform a CMA. A CMA is a comparative market analysis. Again, back to the CCIM instruction and strategic partnering. A CMA basically is taking the area around the property and comparing it to your property. So if you have another apartment that's like kind, you will get that apartment and you would put them side by side and kind of do a comparison and see, based on your amenities and what they're missing, exactly what it is that where you should be priced at and where the market is around your area. You definitely want to see a market that is gentrifying, that's actually growing, and definitely not a market where people are moving out. If people are moving out, you shouldn't move in. Okay, they're moving out, you should not move in. Get a CMA, find similar properties, tour the property, and ask the property managers on site, if possible, some questions. And I see Elaine, you might have a question. If so, feel free to unmute yourself and ask your question. That would be fine. If
You
not,
mentioned trying to find properties in areas that were gentrifying. What are some key metrics to take a look at to know whether or not that's happening in a particular area? I mean, aside from your typical Starbucks and Whole Foods, because usually by the time those are up, the prices have already gone up for property.
that's a great question. So what you want to see is basically you want to make sure that people are moving in, right? That it's not an area where people are moving out of the area. And you want to see the neighboring counties, the neighboring cities, are they growing in population or are they declining? Also, you want to see the job growth. And believe me when I tell you, this is a different topic altogether. It's a whole different a meetup that I've done as well. So I would advise you to go into my YouTube channel and take a look at previous videos of this meetup, because we take a deeper dive into that as well in our multifamily videos. But basically, you want to make sure that there's more than one employer. You want to make sure that the area has blue collar as well as white collar, and it depends because you're looking, there's different class of properties. There's class A, class B, class C, and class D. D is kind of like a war zone you want to stay away from. C is that 1970s, early 80s build. B is a little bit newer in the 1990s to early 2000s. And class A are usually the newer properties, usually have great amenities and better shape. So keep in mind the employment. You want to make sure that there's not a lot of unemployment in the area. You want to make sure that there's several large employers. And me personally, I try to look for an area that has, JJ was talking about the areas that he's looking for, particularly secondary and tertiary markets. So these are going to be areas that are not Atlanta proper, but are on the outskirts, if you will, of Atlanta proper. And so in those areas, you want to make sure that you have at least a population of 60,000 or above. And in a nicer area like class A or class B, you really want to make sure that you have a population of 100,000 or more. So employment, population growth, multiple employers, these are key factors to keep an eye out for. And did you still have another question, Elaine?
No, that was great. Thank you.
No, my pleasure. And again, if you go back to my other videos, I think that question is better answered there as well. So thank you for that. And then guys, that was, before it's under contract, these are the things you want to do. And then after it's under contract, you want to inspect the property immediately. So what does that mean? Sometimes people will go under contract, then they'll be like, okay, I'll go see the house tomorrow and we'll start doing the legwork tomorrow. My advice is, especially with multifamily, if you got into the contract today and you went binding today, you should definitely go send your lender the contract with all the documentation ASAP immediately. And right after the closing, or if possible like directly after the closing, make sure that you have someone at the property. That way there's no surprises and the people know that, there's new management and there's a new ownership as well. Lenders, they also require the inspection. So they're going to let you go ahead and do your own inspection, and as well you should. But the lender's also going to have their own inspection. They have investors as well that are looking to get, the right type of deals in their underwriting, in their books, if you will. So they want to make sure that this property is in great condition, that has got the promise of future profits, that it's appraising, that it's increasing in value, and that there's nothing, no major defects or deferred maintenance that's gonna cause your numbers to be off. So you don't want to have like major roof repairs on 3 buildings. That's going to cost you excess of $400,000, $500,000. So the lender, don't look at the lender as your enemy in the deals. Actually, the lender is your partner in the deal, and let them help you. You know, you do your own due diligence, you do your own background check, you do your own lease audits and everything else. And then you have the lender bring theirs to the table, and then you guys compare notes, if you will. That is very important. Also, very important part of the due diligence is to make sure you walk every unit. Murphy's Law, the one unit you don't walk is the one that's going to give you the biggest headaches. One of the things that I've always done, and that's walk every single unit. I don't care if you're buying 2 properties and you have 600 units total. The lender's going to give you ample time to do the walkthrough, to inspect the units. When you're doing the inspections, you want to have something like this, like a legal pad with you. And also, like, we have like a due diligence checklist that we've used in the past. You definitely want to have a due diligence checklist, because that's going to tell you it'll be your eyes on the property. Later on, you won't have to remember which was the one that had the mold in the kitchen or whatnot. You'll be able to look back at your notes and refer to your notes on the due diligence sheet. Always make sure to walk every unit. If they tell you for some reason, and this has happened, oh no, that one unit, we can't show that, the resident or the tenant hasn't been there, they're really sick, we don't want to go in there. Ask them for another day that you could see that unit, and do not go binding. Okay, or better said, you are already binding, it's already under contract, but make sure that you walk every single unit without fail. You want to also look at the exterior for any deferred maintenance. And if you remember at the beginning, when we said before it's under contract, you notated if there's any amenities in those other comparable buildings that you're missing, or if there's something that your property has that they don't, make a note of that, because that's going to be beneficial when it's time to do your renovations. You want to make sure that the renovations you do are going to be in your best interest, and that they're there for a reason. You don't want to just renovate haphazardly. You really want to renovate with intention in mind, and with profits in mind, and especially with your investor profits in mind. And then in the financial due diligence, before it's under contract, you definitely want to review the T12s or the trailing 12 months financials on the property. The seller will always usually provide that. Sometimes it happens where the seller is like a mom and pop in parentheses, and they literally used to do their accounting by hand. Either that, or they weren't good at keeping records. And then some banks will not loan on a property like that. And some banks have it set up where they could do a financial report, if you will, and kind of go back and kind of have a report about the accounting. Is just not as officially organized as you would a T12 or trailing 12 months. And then also the rent rolls, you want to review that. These are the 2 documents, by the way, Elaine, that you're going to need when underwriting the property. Those are the 2 main ones. It's the T12, the trailing 12 months financial profit and loss statements, and also the rent rolls. And make sure it's all current, and you want to analyze them and do your audits. You want to do lease audits, and the bank's going to do theirs as well. You want to make sure you do your lease audits so that all the information, the rent rolls, are correct.
Got it. Okay, thank you.
No, my pleasure. Thank you. Excuse me. Then again, yeah, go ahead. Somebody has a question?
Yes, sir. This is Ray.
Go ahead.
I guess I was already initially thinking that you were talking about hard money lenders, but I heard you mention banks and stuff like that. How would this be applicable if we were to use hard money? Because I had an issue where my debt to income, because I retired, so I get half the income right now at this point. So
Mhm.
I'm trying to find out, like, what do you advocate for lender wise, like hard money lenders, or are we just particularly talking about banks?
Well, no, see, so sometimes you're gonna need a hard money lender. It's called a bridge lending, bridge loan. And the bridge loan is gonna actually help you bridge the gap between the capital that you raise and the money that's still needed to purchase a property. So when you're raising capital, you're going to get the investors to bring in some capital, like we mentioned before in the syndication. You're pulling in those investor funds to purchase the property. So you're gonna need to do that. But when it comes to getting the proper financing, kind of the property itself will kind of dictate what the proper financing should be. One example, if you have a Class C property, chances are, let's say, especially if it's not at least 95% occupied, the lender's going to want at least 95% occupancy, and they don't have it. So the lender's not going to be inclined to lend on that type of property. Hence, a bridge loan will help you bridge the difference between the capital that you raised and the money that's still needed for the down payment on the property. And you'll be able to get that with either a bridge lender, a hard money lender. They're both the same, one and the same, or what we call private equity. And these are different types of loans that are used daily for multifamily properties. Great question. I hope that answers your question.
Yes, sir.
Thank you. That was really a great question. Thank you for that. And actually, guys, if you'll forgive me, some people are still trickling in, so I'm just letting these people in. Thank you for that. And we're almost at the end of this presentation. And by the way, you guys have been super great. Thank you for the questions. Thank you for the participation. That makes it so much better for me. I really appreciate it. And yeah, you want to review 2 to 3 years worth of financials on the property. I go one step further. I actually go, if you have someone that could help you with a CoStar report, go to CoStar and look at the history of the property. You'll be able to see at what the property traded at when it was first complete. And then you'll be able to see what the property has been trading on ever since. Excuse me. So you don't want to pay more for the property now than you did, let's say, a couple months back, right? But it's possible that in this market, you definitely will. But it's good to know, because if I know that this property traded at $2 million last year, then I'm not going to go ahead and pay $5 million this year. I'm not going to pay double the amount. And let's say in, what are we in, May, 5 months, right? So keeping that in mind, that's what I do. I always look at the 2 or 3 years worth of financials, and then I go into a CoStar report and look at the history of what the property has traded at. And mind you, I do that not just for multifamily, but if you're also one of those single family investors, that's a helpful tip for you as well. Yeah, and then when you're comparing other properties, you want to make sure that the security deposit account is accurate, and you also want to make sure that if you're giving any concessions, move-in concessions, you want to make sure that they are notated in the financials, right? In the lease audit as well. You definitely want to make sure that it's there, because sometimes the sellers could be a little deceptive. There's some things they might not want you to know. And, it's buyer beware. It is your job to do the due diligence, guys. And it's not like single family where your closing attorney is going to be looking out for, for whatever might be missing. In this case, it's, I forget the Latin terminology, but basically it boils down to buyer beware. Make sure you do your own due diligence. And that's what we're presenting on today. Your lender's going to do their own audits, their own leases. And let's see what else. Properties. Yeah, that's pretty much it there. Any other questions you guys might have? But basically what I want you guys to come away with is the lender in the due diligence is your friend and partner. Keep them in the loop with everything. Make sure they have all the documentation that goes along with the contract. Make sure that they are in contact with your private money in this case, or your hard money as well. And make sure that they're in communication. One last thing here. Next month's topic is going to be negotiating and submitting your first multifamily deal. I'm looking forward to hosting you guys and hope you guys will join us for that one as well.
I'm sorry. Can I ask you
Yes,
a real
Karen.
quick question
Yes,
before you move
please.
on?
Yes, please.
You said that move-in concessions need to be notated in the financials and the lease what?
The lease audit. So the lease audit, yeah, is basically you're trying to figure out if the rent rolls that they've given you are correct. And if there's nothing, they're not cooking the books, if you will, they're not adding stuff that shouldn't be there or removing stuff that should be there. So yeah, the lease audit is where you're going to go. The lender's going to do their own as well. And you want to do your own and then compare with the lender and make sure that everything is accurate. And, if there's any questions, very important point, I'm glad you brought it up. If there's any questions, that's your chance to reach out to the sellers and say, why is there, I see this concession here or this account that says you gave the resident a free month, but in the books is showing that they actually paid the full month. So could you give me some clarity? Could you explain that to me? What happened there? So you definitely want to be able to reach back out to the seller. What I do is I get a legal pad. I live and die with legal pads, and I bring out the legal pad with all the questions that I have for the seller, and I break it down. Do you have some time that we could go over the contract? Yeah. Here are the questions that I have for you. Can you answer this? What was this large expense? Why were you giving so many concessions in the month of, let's say, December? That kind of thing.
I understand. Okay, thank you.
Oh, my pleasure. Thank you. And then you guys, here you have my contact information. You could find me on Facebook as Canis Major Investment Capital, LLC. And yeah, my email address, my phone number. And if you guys would like, we could jump into the breakout rooms. What I'll do here is I'll stop the share and we'll go into the breakout rooms, and that way we could network a little bit. As I was saying, that was a great breakout room, a breakout session. A lot of experienced investors were sharing their information with the least experienced newbies. They got a lot of their questions answered. Everybody asked me a bunch of questions. I was able to answer them, and I feel like they got a lot of value. A lot of them were reaching out. They want to find out more. I told them they could reach out to my YouTube channel. They're going to learn more information about these past videos that we've done, past meetups, topics, everything from finding your deals all the way to managing your deals after you've purchased a property, and how to sell a property later, which is a very important topic as well, disposition of your property. Thank you guys once again for joining us. I had a great time. I really appreciate everyone who showed up, all the participation, all the questions, and I'm blessed to have you guys. Looking forward to having you next time. Until then, this is Carlos D. Reinoso signing off.